Hey guys, welcome back to another video. Today we'll be taking a look at Netflix. So as always, starting off with the PE ratio, it's currently at a 34.21, which is not too bad. Ideally, you want to see this be around a 20 or less though. So this is something important to look at because it shows you how risky the investment will be. Now, seeing if they offer any dividends, they do not. It just seems like they'd rather reinvest all their extra money back into the company. Before we look at the income statement, I want to see what their gross margin and return on invested capital is. Right now, the gross margin's at 41%, which is good because you don't want to see this be lower than 20%. Then with the return on invested capital, it currently says NA. So I don't really know why it says this, and my only guess is it's not updated or something because if the number is negative, they still usually tell you what it is. Now getting into the income statement, I want to start off by looking at the revenue. As of the most recent year, they're bringing in 29 billion, which is up roughly 18 billion from 5 years ago, so this is great to see. They've been very consistent with this, so let's hope they continue this trend as other streaming services get more competitive with them in the future. Now checking out their net income, it's looking just as good. They've been nearly doubling this basically every year. The last thing to look at on the income statement is the shares outstanding. So this is something you want to see decrease. The more it goes up, the less your shares are worth. And as you can see, it's been going up, which is not good. They're currently at 443 million when they were at 431 million 5 years ago. Moving into their balance sheet now, we're going to start off by looking at their current assets. So their current assets are looking good as they've grown to 8.07 billion, which is an increase of 5% from 5 years ago. So hopefully they'll be able to find more stability with this in the future. Now, with the current liabilities, on the other hand, they stand at 8.49 billion, which is a huge red flag to me as they have almost 420 million more current liabilities than current assets. The last and one of the most important aspects to look at in any company is the free cash flow. So cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to be improved on year after year. And as you can see, it's looking really rough. In recent history, they've managed to have only one positive year. In conclusion, Netflix's financials are pretty average in my opinion. Some things I would like to see be improved on before I put my money in the stock is the balance sheet, the free cash flow, and I would like to see them start buying back shares. Once they fix at least two of these issues, then maybe I'll consider putting my money in. But two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I'm not a financial advisor. I'm just a guy speaking my opinion on stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. If you guys enjoyed the video, feel free to like, comment, and subscribe. Otherwise, thank you guys for watching and have a nice day.